You may have seen the headlines this week. The Monetary Authority of Singapore just issued advisory letters to 5 content creators for possibly giving financial advice without a license. So let's take a moment to unpack what that means and why it matters more than ever for you as an investor. Now, this isn't just another headline, it's an inflection point for how retail investors must look at financial content. With so much noise out there, it's a timely reminder for us to be more prudent and critical, not just only as a content creator, but as investors as well. Now, even on Reddit, there are a lot of discussion about this as well. So welcome back to the Joyful Investors channel. In this special episode, we'll be covering about this topic, and as a responsible member of the finance community, we also want to do our part. And that's why we'll be sharing more about what the Joyful Investors do to support you in this journey. Now, first, we need to ask ourselves, why do we consume financial content? Consuming financial content should generally add value to an investor's decision making, not just to entertain, distract, or instill fear. For the passive investors, by constantly chasing the market news and events, that usually does not help for our long-term portfolio outcomes. Now, case in point, just take a look at the content being put out in April this year during Trump's Liberation Day, where he announced the tariffs. Has the content that you consumed back then added much value to your portfolio? Or did they make you feel too afraid to take action? Most of the videos out there actually didn't age well, and some of them may already have been deleted by the content creators themselves. Meanwhile, active investors who are seeking an edge often find themselves overwhelmed by a flood of information that's mostly retrospective. And by the time that it's published, it is already reflected in the market prices. So the unfortunate truth is that most videos and articles rehash what has already happened, like 10 things that moved the market this week, or reasons why this stock crashed. Some of them even go on to tell you all the signs that were there, but only after the stock has already crashed. And when the stock recovers, they will do another video to tell you the signs were also there, that it's going to recover. Ask yourself, do you think such regurgitated content can lead to profits reliably? Do you think that something that everyone can see can still give you any edge in investing? And then you have the classic, if you bought this stock 10 years ago, today you would have how many X your money? By that logic, the best time to invest is always yesterday. Does this sound familiar to you? Just to be clear, I'm speaking in general, not pointing fingers at anyone. So why do so many content creators stick to reporting the past events? Because it's safe. It's risk-free. Nobody can fault them for predicting, what has just occurred. On the surface, it even makes you look very smart. But investing in real life is nothing like that. It's not about being backward looking. Do you agree with me that when you drive a car, you don't drive while staring through the rear view mirror all the time? You should be looking at the front most of the time, right? If you keep looking backwards, sooner or later, confirm there will be an accident. Hence, financial content for the most part would serve as market updates or entertainment at best. You shouldn't be hoping that by liking, subscribing, or following these channels, you can get some cool tips that are going to get you outsized returns from there. Now, influencers are not the gateway for you to quite easily like that. But of course, for the more astute investor, maybe you can use it as a reverse indicator, perhaps? Okay, just kidding. So do manage your expectations from what you can get out of this type of financial content. Now, another reason why finance content creators post such content is because when there is demand, there is supply. New investors are happy to look for that holy grail that would take them to the promised land within the quickest amount of time. Hence, some content creators capitalize on this fact and they cherry pick the stories of overnight riches that hit big on this one stock that rarely align with proper risk management. Or sometimes they will talk about which is the stock that made them the most money or what's the next big thing to invest. Yeah, so these are the kind of content that a lot of audiences actually crave to hear. And that will almost ensure that those kinds of videos do very well for viewership. But it does not help that some of them may even take pictures of themselves, with Porsche cars or yachts to create the impression that they're doing very well in life, but actually it was only rented. Oops, sorry, this photo shouldn't be here, but you get my point, okay? So for context, this was actually a get-together event for Singapore finfluencers that is held by Phillip Capital. Now, personally, I do not usually take such videos. The truth of the matter is that many of their sources of wealth are not made from the markets itself. Now, again, I'm just talking about content creators in general, and it extends overseas, not just only in Singapore. They could be a millionaire, except that the money could very well be from sponsorships, endorsements, employment income, or sometimes handed down wealth, which is why you rarely see portfolio results or performance being posted up. So I hope I have helped you all to connect some of these dots. For most investors, if you ask me, the aim should actually be steady inflation beating growth for long-term investment goals, not recklessly chasing after the next shiny object. So it's vital that we set clear investment objectives. Retiring comfortably isn't compatible with a go big or go home mentality. And what happens next? Now, as always, the market doesn't care until it cares. Inevitably, we will reach a point where prices have raised far ahead of the fundamentals. Now, people will start buying into these hyped up stocks pushed by the credible influencers, judged only by their follower count. So, what happens in the end? Many of them actually lose money. And when the market eventually recovers, they also missed out on the sound investment opportunities. Or that when a certain unregulated product or broker has gone bust. And then we point fingers at the influencers when things go awry. I'm not absolving them from zero liability, of course, but part of the root problem often also lies in investors' reluctance to do their own due diligence. Now, many of them want to hear instant solutions or instant gratification of the perks that they can get by opening these accounts. Now, the problem is that even if local creators tightened their standards, we are still exposed to the international content, meaning to say that the risk persists globally. Now, the truth of the matter is that even if they hadn't taken the wrong advice from creator A, they would still have fallen prey to creator B and had gone through the same outcome. Now, as human beings, people tend to take mental shortcuts and as a result, follow the loudest creators or have a cult following. So, here's the uncomfortable truth. As Benjamin Graham once put it, the investor's chief problem, and even his worst enemy, is likely to be himself. In investing, being naive is not harmless, it's expensive. For example, believing in things that can give you 20% annual returns without any risk, or hoping for some magical indicators or software are usually a recipe for disappointment. So, how do we solve this problem? Now, unfortunately, whether you like it or not, you got to be good enough yourself in order to know who is good enough. So, in order to gain mastery, you have to start from somewhere. At the start, we all don't know what we don't know. And that's what we call the unconscious incompetence. It's not a place where we want to be, but everyone begins here. Now, then after spending some time there, down the rabbit hole, you get to elevate your skills to conscious incompetence of now knowing what you actually don't know. Then you begin to discover more and know what you previously didn't know and form some conscious competence. Now you continue to refine your craft, and lastly, what happens at the end? We arrive at what we call the unconscious competence, where you even forget that you actually know the full spectrum of things that you know, because now they are just second nature to you. So that's a journey that you have to go through to become more competent as an investor, or even any other skills for that matter. Now, most people remain in the brown and green zone because it's what we call the comfort zone. Most people, once they touch the green zone, they will move back to the brown zone because there is cognitive dissonance. They start to hear many things that they cannot believe to be true and rather remain where they are. So at this juncture, after speaking so much, we think it is important that you also understand who you're actually hearing from. Now, after all, for us at the Joyful Investors, we are also a content creator ourselves in some sense, although our focus is still more on the educational and portfolio management side of things. Now, some of you who have been following us for the last 4 to 5 years, or you have either attended our in-person workshops, or you tuned in to some of our talks at investing symposiums, at SGX events, or even at financial institutions and the local universities. Now, of course, there are some of you who are seeing this video, perhaps you're still new to us, so I would like to also take this opportunity to share a little bit more for those who don't already know me yet. Now, I'm Hazel Hill, the Chief Trainer and the co-founder of the Joyful Investors. and I graduated with a first class honours in accountancy from NTU. And I previously worked in one of the big four accounting firms where I had the opportunity to hone my skills in financial analysis and business fundamentals. I also head the TJ Academy, which runs our flagship course, the Moneyball Investors Playbook and the Options Investors Playbook programs, alongside other investor training workshops that you may also see from time to time at SGX or at SIAS. So I have been actively supporting the financial education initiatives, sharing insights on long-term investing, on portfolio building, on market cycles, on various platforms. Now, but this company is not just only about me, although you would have seen me most of the time. Now, alongside me, I also have two other co-founders and coaches as well. You would have probably chanced upon them who were present during some of our in-person events, or whenever we go down to the schools, or when we speak at brokerage firms, or when we speak at SGX. Now, in fact, Kathy is my sister, and she was also the one who got me interested in investing at a young age. So Kathy is a co-founder of the Joyful Investors, and her forte is in technical analysis. She holds a degree in economics in NUS. Her early career working alongside traders at Merrill Lynch and Citibank also exposed her to the inner workings of the financial markets and some of the often overlooked challenges that trip up new investors. So today, Kathy helps the new and experienced investors to avoid these common pitfalls and to refine the strategies that can capture the upside potential while managing the downside risk. Now, she also serves as the CIO of the Investing Note Portfolio, which is a subscription-based service in partnership with Alpha Invest that is designed to help retail investors achieve stronger, more consistent investment outcomes. And my last co-founder is Keith, who is a very experienced private client advisor, licensed by MAS, and he has been in this industry for almost 2 decades. Now, Keith is an investment mentor at the Joyful Investors, and he's the mastermind behind the Moneyball investing methodology, which is a strategy that has enabled him to achieve financial independence back then by a young age of 35. And he has also worked very closely with some of the asset managers to deliver tailored wealth solutions with a strong focus on retirement, and that's how he has helped many clients to achieve early retirement. So for those of you who want licensed advice, Keith will also be leading our Alpha Joy Managed Portfolio service to the public, which we will also be sharing in due time. Now, for our community who wishes to talk to someone who is regulated, you want to get personalized financial advice, he is someone that you can reach out to. So enough about us. Now, just as equally important is, as a company, what do we stand for? What's our North Star? So during the height of COVID in 2020, before we incorporated the company, we actually discussed among ourselves what our company should stand for. We were guided by a clear conviction that investing should empower everyday people with the clarity, confidence, and integrity. And this core purpose shapes every decision that we make here at the Joyful Investors. Now, we believe that financial education should cut through the noise and deliver substance over hype. That's why we share performances and our track records transparently with our community. Our educational materials, like the slides that we use to teach or to share at investment talks, they are designed to nurture real understanding, not to provoke fear or FOMO. And every framework that we teach is intended to help investors become independent, mastering not just the what, but the how and the why behind every investing decision. Now, case in point, back in April this year, when the markets tanked by more than 10% in 2 trading sessions, we actually shared how our portfolio was doing back then transparently on our public Telegram channel, our Facebook page, as well as on the Investing Note platform. We showed how our portfolio held up and outperformed the benchmark during about 20% the past 1 year, as opposed to the S&P 500 at about 3% at that point in time during the market lows. Now, closer to home for Singapore REITs, instead of being fearful, we actually showed how we did the opposite. Now, it was definitely still an unpopular opinion to be looking at REITs back then in April 2025. But in fact, we have actually been sharing about the investment merits of REITs at past investment fairs and talks as well. We want to show that making money in the markets is also about learning how to handle paper losses and to think like a contrarian. We don't just share the good times, only when the markets are at all-time highs, but to also share what happens to us when the going gets tough. So we do this to show that dividend investing is not necessarily dangerous if you know how to do it well, and it is possible to mitigate some of our losses in the Singapore REITs market even before a meaningful rebound happens through the use of proper technical analysis. For our inner community who receive mentorship at our flagship course, the Moneyball Investors Playbook, or who are part of our Investing Note portfolio subscription, we are also able to focus on sharing deeper insights substantiated with hard facts, financial data, and analysis to make more informed investment decisions in this journey and in real time for portfolio construction. So for example, in December last year, 2024, we cautioned why it could be prudent to avoid chasing that market rally in the US market and to resist the FOMO. Then in mid-April 2025, we shared our rationale for taking a heavier position in the US market based on our analysis on the underlying reasons behind that market correction. As a clear disclaimer, we never tell anyone what to do. Instead, our focus is on helping our members to develop that critical thinking and analytical skills on their own, because this is the real key to succeeding in the markets, by learning how to fish for themselves on their own and not through all the clickbait stock tips kind of contents that you see online. Now, ultimately, you want to be the type of investor where, just like a bird that is sitting on a tree, it is never afraid of the branch breaking. And that's because the trust is not in the branch, but on its own wings. Even if the branch breaks, the bird can fly away to safety very quickly. Now, for investors, the branch can be the market, or it can be the influencer that you follow, anything external. Now, things can happen, markets can crash, but you take heart that you have a sound methodology that will thrive from what's going around in the world. You have to grow into the kind of person who can handle the tough parts of this investing journey, and that's where you will see the rewards will come after. And this is what true investing is all about. So every action that we take at the Joyful Investors is a reflection of these beliefs. Our commitment isn't just to help people become more informed investors, but to build a community that values the long-term growth and knows how to stay discerning in every part of their investment journey. So we emphasize a lot on risk management, or even sharing about unpleasant truths of the stock market over the hot tips or the emotional reactions. Now, our strategies are methodical and data-driven, and it's not merely following the crowd. And yes, like other creators, external parties do reach out to us from time to time, but we can let you know transparently that all these opportunities for partnerships or for sponsorships, they are evaluated with the highest editorial integrity, because we feel that we owe a duty of care to every viewer, even if our reach is just 1/10 of others. And so it did not happen by chance that we have not been in the spotlight for a few number of things that you might have seen over the past 5 years. And we strive to continue to stay that way, where brokers go bust or where investors chase after the 10x stocks that many have now become backholders. Now, these are non-negotiables for us as a company, even if it means slower growth to us. So for us, the most important thing is about helping our community members to thrive well in the markets. Everything else is secondary. We're not here to churn out the clickbait titles or to push out videos just to chase the eyeballs. We can look at every one of our followers right in their eyes and say that their well-being and financial interests are at the top of our minds. So if I were to sum it up, I feel that regulation can establish boundaries, but it can't necessarily create quality. The financial industry penalizes regulated representatives very heavily for lapses. Yet, content creators with even a larger potential impact probably face less stringent consequences as of now. Now, this imbalance may mean that sensationalized or careless content may persist, leaving the retail investors at risk. But that said, we also do hear that some regulated individuals may not have their clients' best interest from time to time as well. Hence, if you ask me, instead of trying to find out who that 5 content creators are that have been warned, which we do not know ourselves as well because we are not one of them, I would think that as retail investors, we still have to fall back on ourselves no matter what. So quoting from some of our friends at Investing Note, investing is a lifelong skill, redefined only through cycles of study, critical reflection, as well as the experience. Now, there are no shortcuts to it. Focus on getting it right before you want to go fast. The stock market ultimately will always be a device that finds its way to transfer the wealth from the dumb, lazy, or greedy person to the one who knows how to manage risk properly. Quality guidance may inform, but ultimately responsibility still lies with each individual on how you can learn, discern, and avoid repeating the same costly mistakes. So as investors, learn to think critically, not just consume the information that you see online. The authorities can only do so much, right? The rest is up to each of us. And very lastly, if you like the community that we built, we appreciate that you can show your support to like this video and subscribe to our channel, and also hopefully see some of you for our in-person events or workshops. And lastly, if you know someone who's confused or very overwhelmed by all the noise out there, send them this video to help them find more clarity and do well together as a community.